You ever get that feeling, when you're trying to work out who really owns something?
Uh-huh. Like pulling a thread and it just keeps going.
Exactly. That kind of frustration, trying to see who's behind the curtain, whether it's some flashy company or just a random building.
Yeah.
So today, we're going deep. We're looking at a concept in finance that, honestly, it touches almost everything. Big international scandals, everyday business stuff.
We are. We're going to try and unravel shell companies using some really good info from FinCrime intelligence.
Okay, shell companies. For those of us maybe not living and breathing finance terms, what exactly is one?
Right. So basically, a shell company is it's a business entity, a legal structure that exists mostly just to hold assets or, handle financial transactions.
Okay.
But, and this is key, usually without significant real-world business operations. Think of it like a container, maybe. It can own things, move money, but typically no factory, no employees making things, that kind of stuff.
A container. I like that. So the name sounds a bit, well, suspicious. But they aren't automatically illegal, are they?
No, not at all. And that's a really crucial point to make early on. Shell companies definitely have legitimate uses.
Like what?
Well, things like international tax planning, sometimes they're used to temporarily hold assets during complex mergers or acquisitions, or even just holding intellectual property rights in a separate, clean entity.
Okay, so there are valid reasons,
Yeah.
but I have a feeling that's not the whole story, right?
Not the whole story, no. While those legitimate uses are real, shell companies are, let's be honest, probably better known for how they can be misused.
Uh-huh. For the shady stuff.
Exactly. For hiding who really owns assets, sometimes for tax evasion, definitely for laundering money from illegal activities, and for hiding the profits from things like fraud or corruption.
And we're talking serious money here.
We really are. The estimates, they vary, but it's believed that trillions of dollars might flow through these kinds of entities globally every single year.
Trillions. Wow, that's hard to even picture.
Yeah.
So how do they actually work for hiding dirty money? What makes them so useful for that?
They're particularly useful in what money launderers call the layering stage.
Layering.
Yeah, so first you have the illicit money, right? The proceeds of crime. Then you need to make it look legitimate, disguise its origins. That's layering.
Got it.
Shell companies are perfect for this. You set up complicated ownership structures, maybe involving multiple shell companies in different countries. You move the money between them. Each transaction adds a layer, making it harder and harder to trace back to the original illegal source.
And the lack of real business activity helps there too, I guess.
Absolutely. It means there aren't legitimate business records or operations that investigators could easily examine. It's just financial flows, often designed purely to confuse.
You hear the term offshore a lot with this.
Yeah.
Why is that link so strong?
Right. Well, certain places, often called secrecy jurisdictions or offshore financial centers, they have very strict bank secrecy laws and generally low transparency requirements.
So it's easier to hide there.
Much easier. Minimal disclosure about who really owns the company, what it's actually doing. That makes these places very attractive for setting up shell entities intended for, well, less than legitimate purposes.
This all sounds quite theoretical still. Can you, ground it for us? Any big real-world examples?
Oh, definitely. Just think about the Panama Papers or the Pandora Papers more recently.
My huge news stories.
Huge. Those leaks showed in incredible detail these massive global networks of shell companies. They weren't just concepts. They were real tools used by real people, politicians, celebrities, business figures, criminals, to move and hide billions, maybe trillions of dollars. It really highlighted the scale of it all.
Yeah, the scale is just mind-boggling.
Yeah.
So whose job is it then to try and untangle all this, to figure out who's really pulling the strings?
Well, it's a tough job shared by several groups. You've got government regulators, law enforcement agencies investigating financial crime, and crucially, compliance officers working inside banks and other financial institutions.
The front line, sort of.
Exactly. They're the ones trying to prevent their institutions from being used for illicit purposes. The big challenge for all of them is identifying the ultimate beneficial owner.
The UBO.
Yeah, the UBO, the actual person, the real human being who ultimately owns or controls the company. And that's deliberately made difficult with these layered structures, especially when they cross borders.
So banks and financial firms, they must be under a lot of pressure to figure this out then. How do they even start?
They are under immense pressure, and the main tools they have are processes called Know Your Customer, or KYC, and sometimes Enhanced Due Diligence, or EDD.
Okay, KYC and EDD, what does that mean in practice?
It means they can't just accept the surface information. They have to dig deeper, ask questions, try to understand the real ownership structure, the purpose of the company, especially if it seems to lack any obvious business operations or is based somewhere unusual.
So if a company pops up, registered in some tiny island nation, no website, no employees listed, that's a flag.
That's a huge red flag. That requires enhanced due diligence, much closer scrutiny. They need to understand why that structure exists.
Okay, so for you listening, our learner, what are some of these red flags? Things that might make someone say, maybe this is a shell company being used improperly.
Yeah, there are definitely key things to watch out for. One big one, as we just touched on, is registration in an offshore place with no clear business link to that location. Why is it there?
Right. Logical connection.
Another is secrecy. If clients or contacts are really reluctant or just refuse to tell you who the beneficial owners are, that's suspicious.
Makes sense. What else?
Look at the transactions themselves. Do they make business sense? Is there a clear economic reason for the money moving in this way? If not, that's a flag.
Okay.
And one more, shared infrastructure. Like finding out that this company shares the exact same registered address or maybe the same directors with dozens or even hundreds of other totally unrelated companies, that often points to structures set up en masse, potentially for shell purposes.
Right, like a factory producing shell companies almost. It seems like finding these patterns would require some serious tech, given the volume of transactions.
Absolutely. Technology is crucial now. Financial institutions rely heavily on sophisticated transaction monitoring systems.
What do they do?
They use algorithms and AI to sift through millions, billions of transactions looking for unusual patterns. Things like money moving in circles, rapid transfers between seemingly unrelated accounts, activity inconsistent with the stated business profile. These systems flag transactions for human review.
And what about tracking the ownership itself?
That's where beneficial ownership databases are becoming more important. Efforts are underway globally to create more comprehensive databases that map out who owns what, helping institutions connect the dots between different entities. It's complex, but improving.
It sounds like this problem is getting more attention globally then. Are countries actually doing things like passing laws to try and stop shell companies being misused?
Yes, definitely. There's been a significant shift towards demanding greater transparency in corporate ownership worldwide. We're seeing real legislative action.
Can you give an example or two?
Sure. A big one in the U.S. is the Corporate Transparency Act, the CTA. It just came into effect fairly recently.
What does it do?
It basically requires most companies formed or operating in the U.S. to report detailed information about their beneficial owners directly to FinCEN, which is the Financial Crimes Enforcement Network, part of the Treasury Department.
So telling the government who really owns the company.
Pretty much, yes. And similarly, in the European Union, they've brought in the fifth and sixth anti-money laundering directives.
Okay.
And a key part of those is requiring EU member states to set up central, public, or semi-public registers listing the beneficial owners of companies registered there.
So the big idea behind all these laws is basically sunlight, shining a light on who owns what.
That's a great way to put it. Sunlight is the best disinfectant, right? The main goals are to strip away the anonymity that criminals rely on, make it easier for different countries to cooperate and share information when investigating financial crime, and, well, ultimately close those loopholes that let dirty money flow so easily.
This feels really important on a global financial level, but bring it back to our listener, the learner. Why should someone who isn't, say, a compliance officer or a banker really care about shell companies?
That's a fair question. I think understanding shell companies, even just the basics, gives you really important context. Context for understanding news headlines about financial scandals, about global economics, about why governments are pushing these regulations.
It helps make sense of the bigger picture.
Exactly. It shows the mechanisms behind some of these big issues. And remember, financial crime isn't victimless. Tax evasion means less money for public services. Corruption undermines trust in institutions. Money laundering fuels other crimes. These things ultimately impact everyone in society.
So being informed about the tools used, like shell companies, helps you understand the challenges and the stakes involved.
Precisely. It's about being an informed citizen, really. Understanding how this hidden world of finance can affect the world we all live in.
Okay, so let's try and wrap this up. We've seen shell companies are these entities, legal structures that can be used legitimately.
Right, for things like mergers or holding IP.
But more often, perhaps, they're misused to hide who owns assets, to launder money, often using complex webs of ownership across different countries,
Yeah.
especially secretive ones.
Yep, exploiting that anonymity.
And figuring out who's really behind them, the UBO, is a massive challenge. But there's a global push now, with laws like the CTA in the US and the AML directives in the EU trying to force more transparency.
A push that relies heavily on financial institutions doing their due diligence using tech and regulators enforcing the rules. It's an ongoing battle.
It really is.
Yeah.
So, as you, our listener, think about all this.
Hmm.
Maybe consider the implications of this push for transparency. If we're trying to reveal hidden ownership in finance, where else could that kind of transparency be beneficial?
That's a great question. What other complex structures shape our world?
What does uncovering these financial mechanisms make you wonder about how money and power flow globally? Definitely some food for thought there.
And of course, if this has sparked your interest and you want to dive even deeper into financial crime, compliance, how this all works, FinCrime Intelligence has a lot more detailed resources available.